What's up, Discord? What's up, YouTube? Welcome back to another market outlook. I'm going to be breaking down what I'm looking for here on NQ, and I'm going to be covering some of the Forex majors like DXY, EU, GU, and I think that's pretty much it for the pairs, and then gold, and then maybe GJ as well. If you have any suggestions of pairs that you want me to look at, anything specific, it could be AUD, USD, NZD, SPX, YM, whatever the case may be. Anything that you want me to analyze specifically, please let me know down below in the comments or inside of the Discord. So these are just majority of the things that I watch on a consistent basis. So, and I know these are the most traded pairs and assets at the moment as well. So NQ, right? So NQ, we're gonna go on a daily time frame here. We're gonna get right into it. So I want you guys to pay attention to this higher time frame because now we're getting this pullback right here that you guys are seeing on the major time frame. And if we draw our fibs from this low all the way to this high, you guys see that we are damn near around the 50%, right? That is a good thing. And also at this 50%, we go on the weekly time frame. You're gonna see a weekly gap right here. Market just tapped into a weekly gap here on Friday, I believe, or Thursday. Then we have this gap here on the weekly time frame, and then we have this large gap here. And you see that we weren't able, this one weekly candle wasn't able to close either one of these gaps, right? That is showing us heavy bullish pressure from this wick. Now understand, this will become a large wick. So when we open, we're gonna open a new week, right? When we open that new week, I would not be surprised if we get a retracement into this large wick. And let's go down to the lower time frames. Let me show you more reasonings of why I'm actually expecting that retracement. So we're going to delete some of that. Let's go to the daily time frame here. Daily time frame doesn't really give us as much as the weekly here. We did have this gap here that we ended up closing. So nothing that I really want to see on the daily time frame except for right here, this high. This high is going to be very important. You guys can see the market got close to this high and we didn't sweep this high, leaving relative equal highs. So this high is going to be a major draw of liquidity for this week coming up. So expect this high to be taken. Maybe not tomorrow, maybe not Wednesday, maybe not Friday. It could take some time, but expect this high to get taken very soon. All right, so that's going to be one of my major areas that I'm going to be targeting this week on the daily time frame, right? We see this trades into this gap and we get this nice push lower. All right, after that we have these highs up here which were respecting this gap. So you see we're respecting gaps here, we're respecting gaps here, and we were continuing lower till we got towards that weekly target. Now you guys see what we have here. Boom, this large daily candle. All right, now there's nothing inside of here on the daily time frame for us to look at, so we're going to go down to the 4 hour, and this is where the analysis starts making more sense. So you guys can see here, we get on Friday this manipulation of this low level liquidity right here, which is a session high. I wouldn't say low level, but just not as huge as the daily high, but it's still a prominent liquidity point, which we rated some session highs and some intermediate highs, but we didn't raid this ultimate high right here that traded into this gap. And you guys can see we have like more little resting highs right here that makes this area even more prominent. All right, so now we see we have this wick. Boom, the market creates this wick after that manipulation. And what do we do from that manipulation? Right here, we get this nice bearish candle that continues us lower. Then we trade into this 4 hour right here. Boom. Now look at this wick. Boom, look at this wick right here. This candle trades into this 4 hour and we reject it. We don't make it to here, which is where we are looking for. So we're going to keep this area here because this is the area that I'm expecting the market to come into before we get another push towards the upside. All right. Why do I not think the market is going to just go off here? It can, but I feel like if we were going to do that, we would have already done that. If we were going to do that, we would have already done that and continued higher towards this draw. So now it really depends on how the market opens. I wouldn't be surprised if the market opens and we gap lower, then we're going to be gapping into this. If the market opens and we gap higher, then we're going to be going towards this high up here. So that's going to tell us which way the market's going. But look from what we're seeing on Friday. The market rejects off the 4-hour, right? And look at this 1-hour gap right here. The market struggles to break this 1-hour gap. Look at this. Even though we do close the 1-hour gap, look at the rejections that we're getting here, guys. Look at the rejection. So even though we do close this 1-hour gap, we don't see that impulsive move that we saw before. We don't see this. We're not seeing these impulsive candles. We're not seeing these impulsive candles from buyers. That tell me buyers are not ready to go for this yet. And also we are mitigating this rejection block, right? We have this wick. That's a manipulation of these highs. This acts as a form of supply, that manipulation of the high, and you see the market is wicking into that, and we finally rejected. And look how we close, guys. Look how we're closing the bullish gaps. So here, even though we did close this bearish gap, we immediately go lower and close this bullish gap. If there were true buyers taking this market higher from this area, then we would have seen the market wanting to respect this gap here to continue as higher, or even just sitting in between this area right here. But we can see as soon as we got this rejection, the market gets another rejection and we're getting sent back lower. So that tells me that we have more objectives, and we do. We objectively do have a bigger and better objective right here. Look at this large imbalance that is sitting right here that I understand that most likely is going to be our target. So now we have liquidity underneath us. We have this 4-hour intermediate low, and we have this nice 4-hour gap in between us. So we have this nice 4 hours gap right here. And also one more thing, if we draw our fibs from this low, right, that was the point, that was the start of the reversal, all the way to the high of our reversal right here. So from this low to this high, we can see the 50% lines up nicely with this gap. So that gives me more reasoning. We have equilibrium sitting here, we have liquidity here, and we also see the market is respecting this rejection block, and we're respecting some of these bearish movements from sellers here. We're not getting that impulsive buying pressure that we've seen before. So that's what's making me more lean towards the market coming lower to take out this low, to trade into this gap for us to accumulate before we continue seeing another leg towards this high right here, which we have relative equal highs, right? That's essentially what I'm expecting here on NQ. Now, like I said, it really depends on what happens when the market opens in about 2-3 hours. Okay, so depending on when you're watching this video. But when the market opens, if we gap higher, expect us to come and take out these highs right here, and we're going to probably get a nice retracement back lower before we see another move. If the market gaps lower, then that's doing majority of the work for us. We're already inside of that PD rate. All we want to see next is the market to accumulate in this area, and for us to start seeing that impulsive bullish pressure start coming back in. Okay, so those are the main things I'm going to be looking for. And guys, if the market just gaps all the way down here or gaps all the way up here into oblivion, then we're going to have to restart our analysis. All right, that's not in our scenarios. We can't predict the market gapping that amount of space. Okay, so don't think of unrealistic things unless we have actual plausible reasoning of why we should expect something like that. All right, I know the markets has been crazy lately. We've been seeing like any type of any tweet from the orange man, any little thing that comes out has been really like creating a lot of volatility and creating a lot of gaps. So I understand some of you might be expecting some stuff like that, but don't just sit there and anticipate it. Right, let's go off of what the market is actually showing us, and if we get a major gap, then we will adjust, and I will update you guys in tomorrow's bias or later on today, depending on how big the move is inside the Discord. Right, so for now, let's just focus on what we see. Okay, and that is going to be my main bias for NQ. All right, that's going to be my main thing that I really want to see is a trade, not a trade, but is a manipulation of this low into this area before we accumulate, and then we see that bullish pressure start picking up again. Okay, something around those lines. That's what I'm expecting on NQ. All right, let's move on. Let's go to DXY. Let's cover some of the pairs here. So on DXY, if you guys been paying attention, Hopefully you have. We're talking about this large accumulation here, and we know that we have from this low here to this high, this low here to this high. Well, look what the market's doing. So on our last leg, which was from this low here to this high, right? From this low to this high was our last leg. And you guys can see we drew the fibs right there, and we had the 50%, and we had the market creating an accumulation. I told you guys about this accumulation. I told you guys that we were going to have one more manipulation of this low, and that's exactly what we did. If you guys have been paying attention to these outlooks, especially if you're trading any of these pairs, we've been giving out the best calls for these trades, right? For these intraday plays like these longs. I don't know about these shorts, right? We're going to talk about this. This is new price action that we have to talk about. But as far as this long right here, we talked about the market possibly accumulating from this 50%. And we talked about the fact that we're going to have one more manipulation because of these lows, right? We barely missed our specific point of interest by a few pips, which is kind of crazy. That would have been a great limit order right there. Barely missed that. But now, what did I tell you guys? We have this large imbalance over here that I felt that the market was going to trade into. Actually, I wanted to see this manipulation be lower and trade lower into here before we got this move. And that's most likely why this accumulation failed, is because we have more objectives down here to fill. And even so, our leg is all the way from here. So honestly, until we break this low right here, I'm still expecting buyers to take control, right? So first step would be invalidating this area right here, invalidating this demand, because this is the last area of demand before we got that big push towards the upside, which would be here. So let's delete some of this stuff here. Boom, boom. Let's make it look a little bit more clean and pretty for you guys. Just gonna delete. The only thing I'm deleting is fibs, guys. That's the only thing, right? That's the only thing that's on my charts and the session indicators, but that's pretty much it. All right, so we had from this low to this high right here. We're inside of this daily gap right there. Looks like we're going to close this gap too, which is not good. One thing I can see here, guys, just based off of this movement, is the impulsiveness of this, right? Just look at the momentum. Look at this momentum. Look at this momentum right here. This shows a lot of selling pressure. What do I not see? I don't see the accumulation yet. It looks like we're trying to form the accumulation. We have a potential selling climax, automatic rally, secondary test. We have an upthrust action in an STMB, which is just a manipulation of these lows. What I need to see next, if this is actually going to be a range and it's going to be a proper accumulation, I need to see this come back into this. We need to see this trade back into this range, right? And actually start forming something. And then we get one more manipulation underneath these lows. And then we get that accumulation. This is going to be a clean, structured accumulation. All right. Do not expect us to just go higher and then that's your accumulation. This is a weak accumulation. If you call this a valid accumulation, then you might need some more help. That is a weak accumulation. This doesn't have the amount of range. Remember when I taught you guys accumulations, we're looking for ranges. Okay. We're looking for ranges. We're looking for an actual structured range that's building orders. All right. So that's what I need to see here. We have some ideas. We have some insight. We're creating it, but I need to see us trade back into here. And then we get one more manipulation and then we go, simply because of this momentum towards the downside. We need to see buyers actually accumulating here. All right. This is not the type of move that we're going to see just a simple bounce. It could happen, but I think that would be morally driven by the institutions and morally driven by external things than it is at the market itself. I think that would be, what's the word I'm looking for? More economical, honestly. The type of move that you would look for a bounce like that, if we were like doing this and coming into here, that's a different story. Right? Then we already have some structure. We already have some low resistance liquidity to target. But understand, if we just bounce from here, we don't have low resistance liquidity to target. We have gaps to fill, yes, but also these gaps can also send us back lower. as well. That's why I need to see that accumulation a little bit more. But that's essentially what I'm expecting. I want to see that accumulation right here. If it doesn't happen right here and we break this low, then this is where our fibs come in, right? This is where we draw our fibs. Now we need to ask ourselves, well, okay, where's our leg? Our leg is from this low down here that mitigated this area, right? It mitigated into the 50% of this area. So that's what we need to ask ourselves. So boom, we draw our fibs from this low to this high, and we can see, look, the market is actually at the equilibrium of our entire leg. So that confirms to me that we might form a even bigger accumulation here that might take some time. So I don't think this here is what's going to drive price anymore. I don't think this demand zone is what's going to drive price anymore. It's good that we have a demand zone here and we're at equilibrium, but I don't think this is going to be the sole reason. I think it's because of this and that we are at equilibrium. We're getting back into discounted pricing. Now we need to see the buyers actually start showing themselves and actually start creating that accumulation. We got to see that range. You guys can see every time the market gives a nice leg towards the upside, what do you see? A range, right? So before this major leg, what do we see right here? A range, right? That's an accumulation. What do we see right here? A range. That's a reaccumulation. This is a reaccumulation right here. And then just this whole move right here, look at this entire range, right? All this whole thing is an accumulation. So that's essentially what I need to see here on DXY. Want to watch what happens here. Of course, you guys know this is going to be the extreme, but before we get to the extreme, I want to see what happens at the 50%, right? EU. So EU now is giving us that retracement here. Okay, this was just super ugly. We have a lot of liquidity sitting underneath us. That's fine. What did we? So we don't react off of the specific point of interest here. We're trading back into the discounted pricing. Well, into premium pricing. We're trading into the 70 and the 50%. I'm sorry, we're trading into the 70 and the 80%. So we're also filling up this imbalance right here. We're in the same imbalance that DXY is in, this daily imbalance right here. This is what I want to see the market trade into, as we are trading into it, but this is where we want to see that distribution happens. I really don't want to see the market close. I don't want to see a daily candle close. We don't care if a candle comes in here, but if a daily candle closes this gap, that's going to make this less reliable. As far as here, that's going to make me think, if we see a daily candle close this gap, that's going to make me think that we're giving an overall retracement. Let me delete some of these fibs, because you guys know that on EU we do have this major distribution, but that's going to lead me to think that we are coming back more into this 80%, not 80%, this 50%, and we might take all of these highs right here as low as this is liquidity, possibly come and retrace all the way up to here before we see another push towards the downside, if we do, right? So another reason why I do think we can continue this bearish momentum is because we're not seeing no real accumulation here. This is not a real accumulation. There's no manipulation. If there's no manipulation, there's no real accumulation, guys. So this is not a real accumulation in my eyes right here. So this is not backed by buyers, even though the market is going higher. So it's not necessarily, I think, that we're going to immediately reverse from here, but this is just questionable. I don't feel buyers is here, even though we're seeing the momentum. The way to really guess that, the way to really see that, is I want to start seeing if we can invalidate some of these areas. But that's the main thing we're going to look for, right? That's going to be our main indicator. Is the market actually invalidating these areas? Is it not? And this is going to be your first area. Don't focus on anything else. This has already got mitigated. You don't have to worry about here. That's something else. That's something else. We're going to just delete all the noise so you guys can pay attention to the actual price action and what we're seeing, right? Right now, the main thing that we see is this high leads to this low. So first we need to deal with this internal leg first to see what happens. If this next daily candle, right? If any daily candle here closes here, most likely expect this to continue higher. All right, expect this to continue higher, giving us a deeper retracement. Now getting to the lower time frame, we can counter this. That's going to be our manipulation candle right here. Go 50% there. Let me see what else we have in here. We have a lot of gaps in here. We do have this gap right there. See, the problem that I have with setting, I'll tell you guys to buy the market here. Now, I would tell you guys to buy the market here, but the problem that I have here is a large manipulation. All right. The precision area for a buy would be here, 50%. 50% here, all the way down. So that would be your proper demand zone. But understand the market can come in here, tap, and then go without getting into here. So I don't want you guys to focus on this area like this is the only area that the market can reject from. All right, this whole entire thing is the manipulation. The reason why I'm circling this area is because this gives you the best risk to reward. Now, I do expect the market to at least tap into this gap. If we are going to reach down here into this, I expect us to at least tap into this gap and fill a little bit of this gap before we see another major leg. All right. So I will expect, boom. I also don't like how we didn't close over here. So we need a closure. First, I want a closure of this high. We need a candle closure at least on the 30-minute, but we're not getting that. So we need that closure first. Once we get that closure, then you guys can be aggressive down here with these longs. At the moment as well, I'm seeing a distribution form right here. This is a nice distribution on the 1 minute time frame. This whole thing, this is a very nice distribution. So what I would actually expect and what I would want to see, since we have the selling climax, we have all of this secondary tests, we have potential up thrusts, right? I'm not sure if this is going to be our UTAD yet. It looks very aggressive. I like the wick. It could be a type 2, but depending if we create this minor sign of weakness or not, right? If we create a strong close here, then I wouldn't expect another manipulation. But if we do not, let's say we just sit here, boom, 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 then expect another manipulation before we actually give this overall distro, right? Or even if we just wick and come back, expect another manipulation. We need a strong closure here in order to determine that this is only going to be up thrust action and it's going to be a type 2 distro. All right. Now, for those of you that are like, what the hell am I talking about? This is new foreign language to you. Go into the Discord. There is a area. There is, let me show you guys right now, actually. All right, you're going to join the Discord. There's a free link down below. You're going to go here to knowledge on the left. You guys can see it right here. You're going to go to knowledge right there. And then you're going to go to mentorship right here. Boom. And then you're going to see all of this. All right, you're going to see all of this. You go right here, section 3, Wyckoff. Boom. This is everything to teach Wyckoff. All right. If you guys don't understand that, there's the latest video here. Then there's other videos as far as the market structure and everything else, right? Everything else is in here, all the sections in there. So you can go check that out if you want to learn all of this, right? And it's not difficult, guys. It's not difficult. We only use it to give us a I'm losing my train of thought today. Using it to give us a very nice analysis on the market and giving us that directional bias. Is the best for directional bias and understanding what side of the market is in control, whether buyers is in control, whether sellers in control, right? So until we close this right here, we're going to wait for that to close above this, and then we're going to look for that retracement. This is just a very nice push. So going to wait for that retracement back into this area, see if the market can maintain. And basically what you're doing here, guys, is you're playing internally inside of a larger accumulation or distribution, because what will happen here is if this is our selling climax, buying climax, and this is our automatic rally, this would make this our secondary test. We would pull back into here. We would create another manipulation, which would be our up thrust. We would pull back into here. Then we would create a UTAD, which would be our final manipulation. And the market will create our larger distribution. But you don't have to wait for all of this to happen for you to trade if you understand what you're doing on the lower time frames, right? So that's the main thing. That's why I want you guys to focus. As long as we're seeing gaps get respected like this, you're seeing gaps get respected, you're seeing pushes like this, you're seeing pushes like this, follow that order flow, right? Follow the order flow of the momentum. Look to see where the last manipulation was, which was right here. Wait for the market to confirm that it is breaking structure. When the market pulls back, look for an entry possibility here and continue riding that, okay? Keep it that simple. So that's EU. Let's go to GU here. Now, let's see here on GU. Okay. Looking at this on the 4-hour time frame, I want you guys to pay attention to right here. We have this daily gap right there on the daily time frame. Boom. Market trades into that gap, and guess what? We create a new high and we close. So, higher time frame structure is being held from this low to this high. This is important for us to know. All right. Now look where the market comes into the 70 and the 80%. There's a reason why I mark my fibs out, guys. All right. Look where the market accumulates. Right here. We accumulate, we create this drive, we distribute, and we create this move down, and we break this low. Great. Right. So now our current structure internally, we know higher time frame. We have this low to this high. Okay. But now we're looking at the internal time frame, right? What did we see on the internal time frame? Well, we seen this high go all the way down and break that low. But what do you not see? We don't see a confirmation, right? We don't see a structural close. We see a wick down here, okay? And that's important, all right? That's important. That shows me that this could be a very, very nice manipulation. We do have an ugly accumulation down here. It's a type 2. Right there, type 2 accumulation. There was a long opportunity right here. We talked about that long opportunity. Boom, all the way down here when the market closed up here, and we wick down into here and we continued higher, right? Boom. Last thing we talked about here, the market was sitting inside of here and we had a supply zone for those of you that are paying attention. What did I tell you guys? I did not like these highs. That's why this wick, that's why this long arrows right here. This is low resistance liquidity. This is trend line liquidity. All right. What do we know about low resistance liquidity and trend line liquidity? It gets manipulated. And guess what? Also, this low resistance liquidity is sitting right underneath the 70 and the 80%. Look what happens, guys. Look at this manipulation into the 70 and the 80%. I just told you guys, I don't draw these fibs for funsies. Okay. All right. So we trade right into the 70 and the 80%, and look at this push to the downside. If you were watching this last market outlook before we talked about this, you could have caught this short right here just off the 70 and the 80%. All right. Targeting this low. You didn't even have to target all these lows or anything here. You didn't have to target here. You could have just simply targeted these lows. The main thing I want you guys to pay attention to as you're watching these weekly outlooks, I don't want you guys to think that you have to wait for these structural movements. I know you guys see I'm on the 4-hour daily time frame, 30-minute, 1 hour. You don't have to trade the 1 hour, 4 hour. Okay. You don't have to wait for these higher time frames. I'm trying to show you guys directional on the higher time frame. So when you're on the lower time frames, you have an idea of what you want to see and what you don't want to see. Okay. That is the point here. All right. Just because, look, guys, if you're going to take a short from here, you do not have to hold this short all the way to this low, because there's no guarantee the market will make it to this low. Look how far this low is. You're expecting the market to give you one big down push all the way to this low. Yes, it could happen, But how many times have we seen the market just go in one direction, except for when it's like some crazy news, right? We always see some type of pullback. We always see some type of retracement. We always see some type of mitigation before it leaves, right? So having those simple targets like this low being a very easy target, depending on your entry, that's an easy 1 to 3, 1 to 4, 1 to 5 RR, right? And you don't even need that much RR. 1 to 2 is very simple. That's really all you need. That's what I target these days. But you can go for a 1 to 3, 1 to 4 with these type of moves. Simply just looking at the overall bias of the market, looking at the overall time frame, and just understanding I don't need the market to completely reverse and go all the way to all-time lows from here. All I know is there's a high probability that the market will react from this area. Why? Well, one, we are sweeping low resistance liquidity. We're sweeping all these highs. We have our high to low fibs right here, and we are in premium pricing of the 70 and the 80%. Look how much we've traced. Okay. So zooming into the price action now, we see we have this main manipulation. After that manipulation, we see the market go lower, and then we break all these lows. So we break this low right here, creating a change of character, which is nice. But look what happens after that change of character. Momentum picks back up. Momentum picks back up right here. Momentum picks back up. So what do I want to tell you guys now? Follow the momentum. Why? Well, go back to the daily time frame. Look where we're at. We're still within this major move. So follow the daily. Right? Now look, another thing right here. Look at this strong candle, guys. Look at this strong daily candle that invalidates this gap right here. If we were going to continue lower from this manipulation, and it was a valid manipulation, right? It was a valid manipulation. So sellers did get their orders filled here because we got a reaction away, right? So it's not like the area did not do its job. It did its job. It just wasn't enough. It wasn't enough. Okay. And now we see buyers coming right back and validating those bearish areas and creating this strong movement towards the upside. So follow it. All right. We've already closed above this high right here. We already have that nice move towards the upside. Let me delete this here. We trade back into a gap. So we have a sponsored area with a nice manipulation right here. Boom. That's going to be your manipulation candle. So this is going to be your demand zone right here. It's going to be your specific area. Then you have your gap. You have a gap right here. So understand when you have these gaps, I want you guys to be careful because the market can trade into this gap and leave. So make sure you're watching this gap as long as it's at the 50%. Let's make sure that lines up with the 50. Yeah. So if we see the market trades here and it's in this gap and it's at the 50%, watch it, please, because we can just take off from here at that 50%. Like sometimes you'll see the market get close to that and then go. And then you're sitting here waiting for that alert this whole time and the market's already gone, right? So make sure you're watching that. Just because we have this demand zone right here doesn't mean the market wants to or needs to come into that, right? The main thing that the market wants to accomplish is this retracement. How far it gives this retracement is just a matter of how many orders it needs to get filled right here. If we even need any more orders, you know, that's all that really depends. And just based off of this, it doesn't look like we need more orders in here, guys. Look at this. And the market is not dying down. So why would we want to always create a deep retracement and then go, right? Maybe that might even make us think if the market gives a deep retracement like this, that might even make us think that we are starting to give a reversal, because why is that so deep versus this retracement and this retracement? Look at this small retracement the market gives, guys. Look at this small retracement compared to this low all the way up here. So to be honest, I would respect a small retracement here and then we continue higher. Doesn't mean we can't get a little tap and then go, but just watch it, okay? Because the reason why I'm saying is that's the issue that I had before, where the market would not give you that deep retracement into that specific area, into that specific sponsor candle. Sometimes we just want to feel the imbalance and take off. So make sure you're watching that as well. And then your target's going to be this high. Nothing is stopping us. Nothing is holding us away. It's a lot of just liquidity at these highs right here, right here, right here, right here. All of those are London highs, it looks like. So lots of liquidity. And then we already invalidated that large daily imbalance as well. That was giving us some bearish order flow. So yeah, I would expect longs until we get back to this high. All right. Now let's look at GJ. GJ here is on another kind of spectrum for me. So we're gonna go on the higher time frame here on GJ. We're gonna look at this on a much larger scale. And I want you guys to look at something, because this is something I see in. The pricing that we're at right now, the last time we were in here was in 2008, around 2007, 2006, so almost 10 years ago, right? So last time we were at these prices, and we've been going up since 2020. Since 2020, for the last 6 years, we've been creating just more and more and more prices, all right? And look at this last string. I know you guys see a lot of structure in here, but look at this last string from all the way from this low all the way here. We've been pushing, right? We have not seen a major retracement. The reason why I'm saying this is because look at all this low resistance liquidity that we just built, guys. Go to this low right here. Boom. Look at all that low resistance liquidity. So I can't sit and look at this and tell you guys to buy this market comfortably. The only thing that I could see is if you're buying the retracements. All right, that's the main thing I could see if you're buying the retracements. But if I were you, I would look to take out all this low resistance liquidity. All right, that's what I would do. I would look to take out all this low resistance liquidity here on GJ. Let's see, straight into this gap. We're getting into the push lower. Nothing specific that I see yet. Nothing specific. This is just one impulsive move. This doesn't look like anything that I would take inside of here either. But I hope you guys get the main idea. Maybe we get a retracement. Maybe we get some type of accumulation. Let's say we get an accumulation. We get a small retracement up here, and then we invalidate. You can look for moves like that to mitigate that move and take us lower. And then we can just keep looking for that same mitigation to take us lower until we take out all of these lows. That'd be the main thing I would look for. But other than that, nothing that I would confidently take from this current price action. All right, gold. Nothing has changed on gold, and I'm not surprised. Remember, I told you guys what gold likes to do at these institutional price points. It likes to range. So that's going to be the last thing here. Gold is ranging. That's a good thing, because this range could be a large accumulation. It could be a redistribution. Right now, I don't know at the moment. Right now, I do see that we have liquidity piling up underneath us. So, of course, I want to see a manipulation. If we see a nice manipulation and we see a nice upthrust, then this definitely might be forming an accumulation. Okay? So if we see something like this, most definitely, then we could possibly look to see if this was the main spring. If you see something like this, then we're going to have more manipulations. Okay. And yeah, that's pretty much it, guys. So I hope you enjoyed this market outlook. Do not forget to click the link down below to join the Discord for free. Also, I am releasing an ebook talking about liquidity. I'm teaching liquidity from beginner to advanced in that book. So if you want to understand liquidity, you understand everything that I know about liquidity and how I use liquidity now to trade the Nasdaq, that's the book for you. And for a very, very, very good discount, just go ahead and click the link below. It's actually for your email, and you can get signed up for the early access list. So if you're on that list, when the ebook first drops, you're going to get notified and you're going to receive an exclusive discount code only for you. All right. So I hope you guys enjoyed this outlook. I'll see you guys in the next one. Peace out.